Most investors in San Jose are doing this completely wrong. They're stuck waiting for tax returns that never come, while the elite are quietly scaling portfolios using money they don't have to qualify for personally. It's called a DSCR loan. I'm Perry Fernandez. We specialize in the high-stakes world of Silicon Valley lending and real estate strategy. We don't just find deals, we engineer the financing that makes them possible. Pay attention because this changes everything. Today, I'm breaking down exactly how DSCR loans work in the Bay Area. No fluff, just the math. Section 1, the ratio. DSCR stands for Debt Service Coverage Ratio. It's the only number the bank cares about. They aren't looking at your W-2 or your tax returns. They're looking at the property's ability to pay for itself. If the rent is $5,000 and the mortgage is $4,000, your ratio is 1.25. You're funded. Here's the part most people miss. The bank is your partner in this, not your auditor. They want the asset to perform. In markets like San Jose, where rents are soaring but entry prices are high, this ratio is the difference between a deal and a dream. Section 2, qualification. Since income isn't the hurdle, what is? It's your credit score and your experience. Most DSCR lenders in California want to see a 720 score for the best rates, but you can close as low as 660. If you've closed 2 or more investment deals in the last 3 years, the doors swing wide open. Experience is currency here. The beauty is the speed. No digging through boxes for 3 years of tax returns. We can close these in 21 days. If you're an investor looking at a deal right now in Santa Clara County, this speed is your competitive advantage. Message me. Section 3, the strategy. DSCR isn't just for long-term holds. It's the perfect exit for your fix and flips. You finish the renovation, you place a tenant, and then you use a DSCR loan to pull your capital back out and go again. Take a duplex in Cupertino. Rents are at an all-time high. A traditional bank might balk at the price, but a DSCR lender loves the cash flow. This is where investors lose money. They think a DSCR loan is more expensive, but they forget to account for the opportunity cost. Would you rather wait 60 days for a 0.5 lower rate, or close in 3 weeks and secure the property before your competitor? Section 4, the underwriting. The key document is the 1007 rent schedule. It's the appraiser's word on market rent. If the appraiser says the market rent is $4,000, but your tenant pays $3,000, the lender uses the $4,000. That's a huge win. In Santa Clara County, market rents are often higher than what long-term tenants are currently paying. DSCR captures that upside. Section 5, the pitfalls. The biggest mistake? Forgetting the PITIA. Principal, interest, taxes, insurance, and association fees. If you don't calculate the full carry cost, your ratio drops below 1.0 and the deal dies. Don't eyeball the numbers. Mistake number 2, ignoring the prepayment penalty. Most DSCR loans have a 5-year step down, 3, 2, 1%. If you plan to sell in 2 years, you need to buy down that penalty up front. It's about the exit, not just the entry. Bay Area market conditions are volatile. You need a lender who understands that a Sunnyvale duplex isn't a suburban home in Ohio. Pay attention to this. Lenders are tightening. The no ratio loans are disappearing. If you have a deal, the time is now. We don't just process apps. We look at the deal. We see the potential in Santa Clara real estate that generic banks miss. For my agents finding off-market deals, DSCR is how you get your buyers across the finish line when traditional financing fails. When the agent, the investor, and the specialized lender align, that's when wealth is actually built in this county. So here's the next step. If you have a property address or a deal you're analyzing, don't guess. Message me the keyword invest or book a call using the link below. We'll run the DSCR math for you in minutes. I'm Perry Fernandez. Stop waiting for the bank to say yes to you and start making the bank say yes to your deal. Expert guidance, deal-focused support, fast help. Let's get to work.